Today, I want to talk to you about something that's very hard to ignore, and that's Bitcoin. But I don't want to speak to you in a hyped, speculative way. And I want to show you why it's smart, even necessary, to include Bitcoin into your portfolio mix together with your equities and your shares and your bonds and your cash and your offshore. And to get this exposure to Bitcoin using the safe South African investment wrappers is definitely something that's very new in South Africa. And today, I want to talk to you about that. Hi, my name is Yolanda. I'm a wealth advisor. It is my goal on this platform to give you easy, actionable tips, content, and strategies that you can use to manage money well, to live abundantly, and build generational wealth. I am the founder of this platform, Financially Fabulous Females. We create content about money, about wealth, about finance from a South African perspective. I'm also the director of Solomon Wealth Management. We are a boutique wealth management firm based in Durban, and we help South Africans all across the country, even expat South Africans outside South Africa. We help them get their money game together and build wealth in South Africa. If you need my help, I'll be happy to speak to you one on one in a complimentary appointment. Click the link where you're watching this video. So I know Bitcoin sounds strange. Digital money, money that you can't feel or touch. But let me break it down simply for you to understand a little bit about this technology and where it's going to be in the future and how you can make money from it now. Bitcoin kind of sounds like internet money, just like how you have a Monopoly money only for the game of Monopoly. And Bitcoin is sort of like this internet money that's only available online. You can't touch it, you can't feel it, you can't smell it, but it is being mined, sort of like gold. It's not printed like rands and dollars, it's completely digital, stored on your phone or on your computer in a digital wallet. You can send this coin to anybody or part of the coin to anybody, bypassing the banking system, by bypassing financial systems. Now you're probably asking, why would anybody prefer this over cash? Well, here's the thing. Cash loses value over time. Governments can just go out and print more money. However, that is not the case with Bitcoin. There will only ever be 21 million Bitcoin available ever. That is why people call it digital gold, especially if you hold it for the long term. And this thing wasn't just created from thin air, it's built upon the blockchain technology. Every single transaction is recorded and verified on a digital ledger that's open to everybody. It's secure, it's transparent, it can't be cheated. Most people like Bitcoin because they can control it themselves. No banks, no government, no financial systems, no regulation. You can use it anytime, you can use it anywhere. It's new and it's different. And this is the way the world is heading. Just like how we move from landlines to smartphones. Do you still know anybody with a landline? So, if you are a conventional investor, why should you even be thinking about Bitcoin? Something that you can't even touch or even feel, and something that's out of the financial banking system. Well, it's long term wealth creation. That's how I choose to see it. If you invested 10,000 rands in Bitcoin 10 years ago, today it would be worth 8 million rands. Now, that's the kind of exponential growth that's not available to traditional markets. Secondly, is diversification. Unlike traditional asset classes that have correlation to each other, for example, gold and the dollar, oil and the dollar, bonds and equities. These kind of correlations don't happen in a crypto market. That means when the JSC is volatile or the global markets are volatile, crypto and Bitcoin can still hold its ground. So by including a little bit of Bitcoin into your portfolio, you are kind of putting together a little bit of diversification and a layer of protection as well. Thirdly, it's a hedge against fiat currency, paper money. Now, the rand continues to be volatile, right? Although the dollar is devaluing, it's devaluing at a slower rate than the South African rand. Bitcoin, on the other hand, is globally priced. A Bitcoin in South Africa is the same price as a Bitcoin in the US, in Asia, in South America. It holds its value. And by holding Bitcoin, it gives you the diversity you need to move away from rand based investments. And it's also protectionary against inflation. Bitcoin has a capped supply. Only 21 million will ever be mined. And now people are trading in fractions because the value of that is so high. I think it's sitting at around $120,000 at the time of recording this video. And that's unlike governments that can go out and just print whatever they need. Bitcoin can't be inflated away, just like gold. This is a quick reminder that the content of this video is not financial advice. It is financial education. It gives you thinking points on how you can build wealth and the components that you need to include in your investment portfolio. If you want one on one investment advice, please click the link where you're watching the video and I will be happy to help you. Now, it's not all brides and savannas when it comes to Bitcoin. All right. It's extremely volatile, it's extremely risky. So that is why you can't have 100% or even a very high exposure of all of your wealth to Bitcoin. Now, Bitcoin can be volatile, it can drop to minus 30 just like that. And if you put more of your wealth in Bitcoin, obviously you're going to be very jittery when the crypto market fluctuates. All right. By using South African investment wrappers to hold your Bitcoin, you provide a layer of security. Traditionally, when you buy Bitcoin, you gotta go to an exchange, load some money, you gotta use your credit card to do that, buy the coin, transfer it to your personal wallet, and for a lot of people that are not tech savvy, that can be a lot of heavy lifting, right? Whereas now in South Africa, we have Bitcoin available within traditional South African products like an endowment. So it gives you the protection. You don't have to worry about the tech. You just have to worry about making your money available to Bitcoin exposure, and you'll be protected by the South African endowment wrapper. And you can, if you're somebody who's technologically savvy, you can go out and buy Bitcoin on your own. Click the link down below, and I show you how you can buy your own Bitcoin using a South African exchange. But if you don't like that kind of risk, the Bitcoin fund is for you. You have the peace of mind of knowing that this fund is professionally managed. Your Bitcoin is handled by investment professionals trained in the financial markets. There's also a lot of tax simplicity when it comes to holding Bitcoin in a fund as opposed to directly. And I'm going to show you a real life example in a little while and how the maths makes sense. Then there's estate planning. Right now, if you're owning crypto and you pass, that crypto falls into your estate, driving up your estate costs depending on when you purchase the crypto and what's the current value sitting at. Whereas when you protect it in that endowment wrapper, your crypto fund can pass on to new beneficiaries, bypassing executive fees. The ownership of your Bitcoin can even change. So people don't have to get out of the investment or disinvest from the Bitcoin fund. The ownership changes and the wealth building continues. Now, if you're somebody who's into generational wealth, now you can see the value of this. Well, you don't have to disinvest from anything, but the crypto hold is value and the ownership changes generation after generation. And also, you're tax compliant. Once you are in a Bitcoin fund that's regulated by the FSCA, you know that fund goes through all the rigorous hoops of the South African financial system, proper licensing, proper thresholds listed on the JSC. So you don't have to worry about managing your wallet, losing the code, because once you lose your wallet passcode, that's it. The Bitcoin is gone. You can't reset your password like a Gmail. Now, Bitcoin has entered mainstream acceptance. More people are adopting the technology. Remember that if everybody decides, right, we're not using the rands anymore, we're sticking with dollars, there's mass adoption, right? I can't go and buy with my rands anywhere because people are not accepting this. And we've seen this in other African countries, our neighbors in the north, that happens to them all the time. I don't know how many times they've changed their currency already, right? So there's been massive adoption of Bitcoin already. Reserve banks are using it, big asset managers are using it, and even regular South Africans are using it to buy groceries, to buy airtime. So there is a case for you to get into Bitcoin, even if it's just 5%. I would say maximum 10% of your investment portfolio exposed to crypto. Now, obviously, the content of this video is not financial advice. Speak to a financial advisor who will assess your risk and give you the risk aligned investments that best suited to you. So let's look at a real life example about how the taxes work, because because it's been so unregulated for so long, the tax rules on this are still a little bit raw. I want to show you how it's better to hold crypto in a fund rather than directly. So let's look at a real life example. Sipo holds some crypto that he bought in an exchange, but he wants to explore the tax advantages that a Bitcoin fund can give him. So here we have Sipo investing into the Bitcoin fund. He's doing this on an endowment wrapper. mainly because he wants the tax advantages. He's on a higher tax bracket, right? He also wants the estate planning advantages as well. And we'll go through that in a second. And he invests R1 million in the fund, right? I know you're thinking R1 million, who does that? But it's just easier math. So go with it for. And let's do the comparison. If he invests R1 million in Bitcoin now versus R1 million in Bitcoin in a fund. Okay, so the initial investment is 1 million. All right, let's look at the value after 5 years. Bitcoin has done its thing, got some exponential growth, and now the Bitcoin is valued at 1 million, at 3 million. Sorry, so 3 million directly and 3 million within the fund. So from a tax perspective, we want to look at the capital gain. So we can see invested R1 million, current value is at 3, so our gain was 2 million, both the fund and direct. Now we got to understand the tax. So the tax on the direct Bitcoin holding would be capital gains. And if it's on an 18% tax bracket, now if somebody has R1 million to invest, they're certainly not an 18% tax bracket. But again, we're just doing an example here. The tax that he would have to pay would be around 360. However, when it comes to the fund, what you got to know about an endowment in the fund is the taxes are paid every year on your behalf directly to SARS. All right. So the investment house would have paid, because of the tax treatment on investments, they would have paid 240K. Remember, when it comes to capital gains within an endowment, you are paying an effective 12% capital gains. That's the rate of tax, capital gains tax that you're paying in an endowment. Compared to um, capital gains on your personal capacity would be linked to your marginal tax rate, but only 40% will be included in that. So, although you have all of these tax breaks from capital gains on your personal capacity, you're paying a higher tax, especially since when it comes to the Bitcoin fund, it's only capital gains. There's no income here, right? So, you're paying a lower tax. It's 120,000 rands less. And that, if that doesn't seem much to you, send me an email. I'll send you my bank details and you can put 120 in my account. After 5 years, you're looking at 2,640,000 after tax, whereas in the fund, you're looking at, whereas in the fund, you're looking at 2,760,000 in your account, right? So the takeaway here is your capital gains, right? You got to understand capital gains on your personal capacity versus the fund, right? Remember, this is only 18%. If somebody has R1 million and they're investing, they're most likely on this bracket. So the tax hit is going to be a lot more. He'd be lucky to come back with 2.5, 2.3 million after those marginal tax rates of 45%. You also have a little bit of peace of mind of knowing that after 5 years, you got to do all of these tax submissions yourself, or obviously get your accountant to do it. Whereas when you're in your Bitcoin fund, your taxes are done every year by the asset manager. You get your certificate every year. You won't even need to declare this. It won't be counted towards your gross income for tax purposes because you've been taxed already, right? So you're getting a greater outcome after tax with a Bitcoin fund. All right. With a Bitcoin fund, you don't even have to stop the investment after 5 years, right? You can take a portion of the investment and start a new Bitcoin fund or any other investment for that matter, and you wouldn't pay any taxes additionally on this. The next thing I want to speak to you about is this estate planning. Should SIPO pass away anyway in these 5 years or at any time while holding this Bitcoin, whatever the value is will get added to his estate and will be wound up according to the state. Remember, estate taxes in South Africa, if your estate is 20 million or less, 20%. If he had to pass away, yes, the value of the Bitcoin fund will be taken for estate planning purposes. However, he won't pay any executive fees on this. No executive fees. And the ownership of this investment can pass on to Sipo's son or daughter or wife, right? Then the investment does not have to dissolve and the ownership can pass about. So if you are somebody a little bit more seasoned that is looking at this, remember, You can have one for each grandchild. Now, imagine that compounding. That's the entire retirement taken care of here. Even for young children, see past the Bitcoin and the exponential growth, but see the strategy that can be used within this fund, right? The ownership will change. That's it. You can even set up the Bitcoin fund in the name of your children and grandchildren now, right? Use it to fund their education, their wedding, property, business in the future. Endowment is a very, very powerful thing, but it can be used badly with the wrong kind of strategy, right? Remember that the regulation and compliance that this goes to, this is an endowment highly regulated in South Africa. With the kind of investments that I am offering with the Bitcoin fund, it doesn't have to dissolve after 5 years. It's an open-ended investment. What you have to know about endowment is that the first 5 years is kind of like a lock period, right? You can only take out one loan or one withdrawal in those first 5 years. But essentially, you want to hold it for your lifetime and pass it on. This is a great way to pass on wealth outside of the estate. Okay, I would see this as a secondary trust. An endowment is just super powerful. So the key points to be aware here is the taxes. 30% tax on income within an endowment. Now, with a Bitcoin fund, you're not getting income. You are in that endowment before the capital gains taxes, which is effectively a net 12% compared to your marginal tax rate of 18 to 45% when you're holding Bitcoin directly. So if you are in a 30% plus tax bracket, the endowment is very, very, very appealing to you. If you don't understand how or why, book an appointment and I can explain it in further detail. The Bitcoin fund in an endowment wrapper is a powerful wealth generational tool. Click the link where you're watching this video. For a limited time, we are offering a Bitcoin fund with a minimum of 25,000 Rand lump sum investment. Traditionally in South Africa, when it comes to lump sum endowments, it starts from 100,000 plus. You can do a monthly debit order. Monthly debit orders start from a minimum of 5,000 Rand a month. So because we have a new fund available in South Africa, it's tracking the BlackRock Bitcoin fund, the biggest Bitcoin fund in the world. We are now running a 25,000, a minimum of 25,000 Rand deposit. So it's a very low entry level way to get Bitcoin exposure with a safe South African endowment wrapper in South Africa. If this is something that appeals to you, click the link where you're watching this video. Now happy to be chatting with you one-on-one. But just a little side note on an endowment wrapper. Remember, you are in there for the 12% net capital gains tax. You are in there for the estate planning benefits of an endowment, where the value of the endowment will not be charged executive fees, and the nature of that investment ownership can change, which is very powerful. Ownership can change, and the investment does not have to dissolve. You also have the benefit of regulatory compliance because these funds in South Africa are highly regulated with the FSCA and listed on the Johannesburg Stock Exchange. If you can work your way using these 25,000 Rand pots to building 5% exposure of your wealth to Bitcoin, you're going to be in an insane position to retire well, depending how young you are, and build some incredible generational wealth that can be passed down outside of the estate. Look, if you're sitting with traditional assets and this crypto thing has just bugged you, mainly because you see a lot of scams, you don't like the volatility, this is something that you can get into because you don't even have to be 100% into the Bitcoin fund. We can smooth out your investment with a blend of bonds and a blend of Bitcoin. Right? This is worth exploring, and I would love for you to explore it with me. Click the link where you're watching this video, and I'd love to chat with you. If you want to know more on how you can buy crypto directly, I'll watch this video.